Information-fueled.
Opinion-driven.
This is Nashville's Morning News with Dan Mandis.
And so, my fellow Americans,
we talk news.
8:07, Nashville's Morning News on Super Talk 99.7 WTN. Welcome on in to the fourth and final hour of Nashville's Morning News. EJ Antoni is going to join us here on the Newsmaker Hotline. EJ, always great to speak with you. For folks not familiar, EJ, of course, financial analyst with the Heritage Foundation. You've seen him on Fox News, Fox Business as well. EJ, always great to have you on. So here in the last 24 hours or so, there has been some movement on tariffs. Trump is giving some relief for tariffs on the automakers. Japan, I should say China, has also given an indication that they are now looking at a number of different industries, imports from America, where they're asking their companies in China, okay, so are there industries or are there products that we need to stop tariffing because we need them too much here in China?
It's a great question, Dan. This is part of the reason why the rollout for these tariffs, frankly, was not done particularly well. One of the things that, for example, that we're tariffing right now are car parts that go across the border multiple times. You might get iron ore out of the ground in Mexico, but then you send it here to the U.S. to refine it. It gets tariffed. The refined ore gets sent back to Mexico to be processed into sheet metal. It comes back to the United States. It gets tariffed again before it can be made into a car door. Then it gets sent down to Mexico, and then they assemble it into a car, and it gets sent back here, and it's tariffed yet again.
Yeah.
So you don't want all of these industrial inputs, whether it's things like car parts or whether it's things like machinery that are going to be used in a factory to help employ Americans. You don't want to tariff all those things. That actually hurts us more than it hurts anybody overseas.
It is interesting. So this was from Newsweek. This was from this morning. Chinese officials quietly drawing up a white list of critical U.S. goods that importers rely on to exempt them from Beijing's retaliatory tariffs. Reuters reporting again this morning, citing unnamed people familiar with the matter. But we've seen this version of the story, I think, for the last 4 or 5 days, to be perfectly honest. Is China blinking?
I think so. We forget that before this whole tariff fight even started, the Chinese economy was actually going into a tailspin, and it's difficult to make that assessment. I understand, because you can't rely on any of the official data coming out from China. They just lie, unfortunately. So you have to rely on a bunch of other data. For example, if you want to know how much is China actually exporting, you have to go look at all the different countries around the world and see how much they're buying from China, and then add it all up. It's a pretty arduous process, but those are the kinds of hoops you have to jump through to figure out how is the Chinese economy actually doing. And you can look at things like the Chinese bond market and see yields are down at depression levels and realize, gee, maybe things are actually not going that well in China. The economy is not moving along swimmingly. So the fact that they are already in a manufacturing recession puts the U.S. in a much stronger negotiating position. That's good news for not only Trump, but for the nation broadly in this tariff fight.
EJ Antoni joining us on WTN. All right, so EJ, I hear you talk about, because I believe that you're absolutely right, and I'm not an economist, clearly. But when you look at our economy and you look at China's economy, I believe, and you just said, that China's economy is not going to be able to withstand a trade war with America. Talk about America's economy, and are we going to be able to withstand a trade war? We're hearing about, prices are starting to go up. We're hearing about supply chain issues as well. China's threatening to stop sending some goods into America. So talk about whether or not our economy can withstand a long-term trade war with China.
Well, I don't think you're going to have a long-term trade war. And that's not me doing some kind of prognosticating like, I think everyone's going to come to agreement. No, I mean, just it literally can't happen. That the Chinese economy would absolutely collapse. They are entirely dependent on their export markets. You take that away and the whole system collapses. The Chinese Communist Party is simply not going to let that happen. They're already taking steps to work around these tariffs. For example, they have devalued the offshore yuan to new record lows against the dollar. That helps diminish the effect of these tariffs. They're also already working on dumping even more products into countries like Canada, where they then get repackaged, relabeled, and then reshipped into the United States. They just slap a different label on it, so it'll say made in Canada instead of made in China. So they're already taking steps to try to work around this, specifically because they cannot sustain a long-term trade war. So the question is just, how does it ultimately get resolved in the relatively short term or maybe medium term? But there is no way this goes into a long-term drag-out battle, because the Chinese Communist Party simply can't last that long.
Well, Kevin O'Leary, of course, from Shark Tank, he actually said that what Trump needs to do is level a 400% tariff on China to get them to the negotiating table.
And what he's talking about there is exactly the things that we just mentioned, right? Yep. It's the fact that China in the very near term has so many workarounds, and it's going to take many months of cracking down on those different measures. It's going to take our trade office, the trade representative's office here in the United States, again, several months to really find all these loopholes, crack down on them before China ultimately starts feeling the effects. Something like a 400% tariff would make it bite no matter what. There is no way you can do enough workarounds to avoid enough of the pain of that kind of a tariff. Now, at the same time, you're going to see more costs passed on to the American consumer with something like a 400% tariff. So what they're doing right now might be just perfectly threading the needle. We're going to have to wait and see.
Coming up on 8:15 on Nashville's Morning News on WTN, EJ Antoni is joining us here on the Newsmaker Hotline. I got a lot more with him straight ahead on the impact of the tariff war. Time to check the roads real quick on WTN. 8:15 as far as your weather goes, a high of 88 and possible thunderstorms. Appreciate you listening to Nashville's Morning News. EJ, let me ask you, we have a super text line here. A texter had a really good point. The people on the left, the Democrats, are screaming about, the value of our 401ks and all that. And I do understand. But under Joe Biden, a lot of people lost value in their 401ks, especially when we saw the 9.3% interest rates and so forth. And so, the market's going to have their ups and downs regardless of what happens.
Oh, absolutely. And I just don't understand how we're talking about the market today as if the last 4 years were this bygone halcyon era. My goodness, you saw literally the worst 3.5-year run of the bond market in at least a century. That's how bad inflation-adjusted bond returns were. And when you think about the fact that most people have a disproportionate amount of their retirement accounts in fixed income assets, especially as they get closer and closer to retirement. They're getting out of equities, they're getting out of the stock market, and they're putting things into bonds and, again, other fixed income assets. They were the folks who really got crushed. The average person who was on the verge of retirement during the Joe Biden years is going to have to work an extra 6 years at a minimum in order to make up all of the inflation-adjusted losses that they've had in their portfolio. And again, although the stock market is up, it's not up nearly as much as you think it is once you adjust downward for inflation under Biden. And then again, your bond portfolio actually lost value. So folks really got crushed over the last 4 years, and the fact that stocks have swooned a bit here as we go through these tariff negotiations, okay, that's nothing out of the ordinary. I'm not saying it's great, don't get me wrong, but this is basically a buying opportunity for stocks. You want to look at this as stocks being on sale.
Buy the dip. That's what they say. Buy the dip, right? Let me ask you, as we continue on here in the last couple of minutes, when you look at everything that's going on from a media standpoint, and I wanted to make sure, because I know that you're very media savvy, you've been Heritage Foundation for a long time, you've been on Fox, you've been on Fox Business and so forth. Is it just me, or does the media seem like they're really trying to doom sell us into a recession?
Certainly. But some of it is the media absolutely playing it up. Some of it is also, frankly, Dan, just the very stupid way that we try to calculate how big is the economy, right? That's something difficult to get your head around. What is the economy anyway, right? It's all of our economic activity. Well, how do you define that? You can look at a report like we got the gross domestic product report today for the first quarter of the year. So this is the first quarter of the second Trump administration. It showed a decline of 0.3%, seasonally adjusted annualized rate. So that basically means the economy shrunk slightly in the first quarter. But how do we calculate GDP? We actually take consumer spending, investment, government purchases, and exports, add those all together, but then we subtract imports. Well, guess what? Imports exploded in the first quarter because people were trying to get product into the U.S. before any of the tariffs hit. So a 41% increase in imports reduced overall GDP by 5 percentage points. That means that what would have been a 5 percentage point increase in GDP turned into a 0.3% decline in GDP. But next quarter, because people essentially all of the stuff they would have purchased in the second quarter, they brought forward and purchased in the first quarter when it comes to imports. That means that now we're not going to see virtually any imports in the second quarter, which will show up as a huge jump in GDP. So the media will take these numbers that they don't understand, unfortunately, because they don't have the background in economics. They don't have the statistical background. They'll take these numbers and run with it and tell everyone, oh, my gosh, the economy's contracting. We're in recession. Meanwhile, the consumer's actually staying very strong. Investment is exploding at a 22% annualized rate. That's phenomenal. And meanwhile, government is shrinking. So if you look at the internals of the report, everything is actually moving in the right direction, but I guarantee the media is going to run with the headline and tell everyone, oh my gosh, the sky is falling.
All right, so real quick, last question. It seems to me like obviously Trump is targeting China. Do you see clearly there is an opportunity with India and South Korea and particularly India to further develop those relationships and try and minimize our dependence on China?
Oh, absolutely. And so what I've been saying here for a while now, Dan, is the fact that I think, are going to see trade deals first and foremost, not with our major trading partners, but with China's, because we're trying to peel nations out of China's sphere of influence and get them into ours. That means inking deals with Japan, with India, with Australia, those types of nations. And sure enough, it looks like we're probably going to see deals with Japan and India, maybe before we get anything with Mexico or Canada. So this is, again, very positive development. Things are moving in the right direction.
A lot of opportunity here. EJ, I got to ask you real quick. So you couldn't make it down to the studio today, but you are in Middle Tennessee for some sort of a highfalutin function. Is this your first time to Nashville?
No. Been here quite a few times before. Terrific town. Home of Art Laffer, a good friend of mine. Yes,
home of Art Laffer, absolutely. Do you go down to Broadway? Do you enjoy, all of the accoutrements of Nashville?
Oh, at this time around, I wish I could, Dan. Unfortunately, I really am just in and out on a tight business schedule. Got it.
Well, EJ, always great to talk to you. Looking forward to speaking to you again. And thanks for making sense out of some of this stuff, because for a lot of us, including yours truly, it does need further clarification. So always great to talk to you. EJ Antoni on Super Talk 99.7 WTN. It is 8:21. On Nashville's Morning News on Super Talk 99.7 WTN. I tried to get EJ to come into the studio, Joan.
Yeah. And?
I think they might still be laughing out there in New York. All right, very good. Oh, what happened here? Why don't we start it over again? It is 8:20.
It sounded really good.
No, it didn't.
Professional as always.
You know what? I didn't ask you two for an opinion on my ability to run the audio here on the show.
No, that goes with the territory.
It does, absolutely, doesn't it? Okay, very good. So, Joan, what's coming up in the news?
So, we've got thunderstorms making a comeback in Middle Tennessee this week. Starting tomorrow, we're going to bring you the latest from Stefano DiPietro. We'll also check out stocks. They're floundering a little bit as we head into the opening bell this morning because of that negative report on the GDP. All that and more coming up here at 8:30 on Super Talk 99.7 WTN.